This is a lecture from Open Tuition. To benefit from the lecture, you should download the free lecture notes from opentuition.com.
Our first port of call with regards to group statements of cash flows is going through here and looking at the dividend paid to the non-controlling interest. I'm a little bit old-fashioned, so I prefer to look at the calculations with regards as to using T accounts. You don't have to use T accounts if you don't wish, but if you fail the exam, that's your own fault. Okay, I have no sympathy whatsoever. If things get complicated and difficult within the exam, T accounts will come to your rescue. Trust me. Okay. I know you sat there going, oh, I don't like T accounts, Christopher. Well, tough. Okay. Learn to like them. You are training to be an accountant. Yeah, and T accounts are fundamental. Okay. So what you've got there is, if you think about your dividend paid to your non-controlling interest, it's a dividend paid, so it's a cash outflow, and it goes there within your financing activities within the group statement of cash flows. So when we think about non-controlling interest, the only place that we see non-controlling interest on the SFP is within the equity section, isn't it? So what you have there is that you have your brought forward figure from the SFP on the credit side. So I say SFP meaning group statement of financial position. And then you have your carry forward on the debit side, ready to bring forward on the credit side in the following year. Okay, so that's your opening and closing balances. The profit figure that you have comes from your statement of profit or loss, doesn't it? So when you split out your profit, at the bottom of your statement of profit or loss, you've got your group profit, which is then split attributable to the parent and the non-controlling interest, isn't it? It's that profit attributable to the non-controlling interest that increases the amount that the non-controlling interest own of the subsidiary, isn't it? So we are crediting that to the non-controlling interest. What you can do then is you can go through there and balance it up, and you will then get your dividend paid. Again, if you think about it, that balancing figure is on the debit side, because essentially what's happening there is that you're crediting your bank and debiting your non-controlling interest, aren't you? Yeah, you're making a payment. You're returning a bit of the subsidiary back to the non-controlling interest. So it makes sense that it is on the debit side, as it is reducing the ownership interest in the non-controlling interest, isn't it? Okay, or at least what the non-controlling interest own. Okay, so credit the bank, debit the non-controlling interest if you like your journal entries. The only other bit that you need to go through and be careful of is just be aware in the exam when you do a big group statement of cash flows question is that there will be the acquisition of a sub, or there will be the disposal of a subsidiary. Now, if that's the case, what you need to do there is thinking about back to where we started to look at your changes in group structure. If you have the acquisition of a subsidiary, then the non-controlling interest is going to increase, isn't there? Because all of a sudden we've introduced some additional non-controlling interest that previously was not there until we gain control of that subsidiary. So you need to credit the non-controlling interest if there is an acquisition of a sub. If there is a disposal of a sub, then we no longer control the sub. The assets have gone, the liabilities have gone, and also the non-controlling interest have gone. So we need to reduce the non-controlling interest by whatever non-controlling interest was disposed of at the date of disposal. Okay. Again, in the exam, they may give you the non-controlling interest at acquisition or at disposal, or you may be required to calculate it. Again, be aware in the exam, it could be the NCI based on the fair value of the NCI, or the non-controlling interest based on the proportionate share of net assets method. So all that is then doing is starting to test you on your knowledge of the group SFP and working number 4 and how you calculate the non-controlling interest at a particular point in time. That's hard, isn't it? Okay, but let's leave that for the time being. Let's just keep it as simple as possible. Okay, and have a look there at a little example. Okay, in the example, there's no acquisition or disposal of a sub. We'll save that until the bigger example at the end of the session. So here it wants us to work out the dividend paid to the non-controlling interests. The group statement of cash flows, the year ended December 2015. So again, it's important to identify the year end so that you can get the correct opening and closing figures. There's nothing worse in the exam when that happens. Okay, so you've got your opening there, 2014 of 110. Your closing is it there of 115. So what we can go through and do is we can draw up my T account. It's there as my non-controlling interest, isn't it? My brought forward was that there as 110 on the credit side. My closing was there as 115 on the debit side. Okay. Once I've got that, I can then go through, can't I, and start to look at the statement of profit or loss. So, you've got this profit figure of 60, but that needs to be split, doesn't it, into the amounts that are attributable to the parent and the amounts that are attributable to the non-controlling interest. So that's what we've gone through and calculated previously by taking the non-controlling interest share of S's profits for the year. It's been done for us. We don't need to calculate it. It's there as 6, isn't it? So we can put in that profit figure there of 6 because that's going to increase the non-controlling interest ownership, isn't it? And then when you balance that off, is it 116 on the right? Is it 116 on the left? When you balance that up, the balancing figure that you have, is it there as 1? That essentially is your entry to the bank because you've credited bank, debited non-controlling interest, and that there is the dividend paid to the non-controlling interest. Again, whereabouts does that go? That's there in your financing activities, isn't it? Okay, there we go, nice and straightforward. Using the T account. If you don't like the T accounts, I shouldn't really tell you, but it doesn't do us any harm. You can do it maybe in the shortcut method that you did in F7. So you've got 110 as your opening, you add the profit, you deduct your carry forward, which was 115, and that gives you there, is it a balancing figure, which is there your cash figure, isn't it, of 1. Okay, obviously then you can add in any non-controlling interest on acquisition of a sub or deduct the non-controlling interest at disposal of a subsidiary. But personally, as I've said, I'm old-fashioned. I prefer the use of T accounts. I also think it makes it much easier for the markers to understand what you've done, and if they can understand what you've done, they're going to give you more credit if you've gone through there and made a slight mistake. So that's it. That's the first figure to go through there and calculate with regards to your group statement of cash flows. The dividend paid to the non-controlling interest that appears there within your financing activities. I'll see you in the next video when we begin to look at the dividend that is received from the associate.